Hello, this is the Chorus Call operator. Welcome to the presentation of the first quarter performance of the Acea Group. And let me remind you that all participants are in listen-only mode. After the presentation, you will have an opportunity to ask questions. To receive assistance from the operator anytime during the conference call, please press star 1. Now, I would like to give the floor to Ms. Ira Angrisani, the Investor Relations Manager of Acea. Please, Ms. Angrisani. Hello, good afternoon, and thank you for connecting to follow the presentation for the first quarter of 2019 of the Acea Group. Mr. Giuseppe Gola, the company's CFO, will now present our performance, and later we'll have some time for a Q&A session. Mr. Gola. Thank you, Ms. Angrisani. Welcome, everyone. Good afternoon, and thanks for participating to our presentation. So the first quarter of 2019 was pretty much in line with the guidance we had provided during the presentation of the performance for 2018, and also it was in line with the business plan we presented in early April. EBITDA stands at 248 million, up 8% versus the first quarter of 2018. EBIT stands at 133 million, plus 4% versus the first quarter of 2018. And the CAPEX, the investment we made in the Q1, was 151 million euros, plus 14% versus the first quarter of 2018. All of those data are perfectly in line with the guidance we had provided. And let me remind you that the guidance was that EBITDA was supposed to grow anywhere between 5 and 6% over 2018. So the starting point was 933 million euros of the 2018 EBITDA performance. CAPEX was supposed to be up by over 10% versus 631 million euros of 2018, and net debt by the end of the year is expected to stand anywhere between 2.85 and 2.95 billion euros. Amongst the events of the first quarter, let me remind you that we finalized the acquisition of 51% of the Pescara Distribuzione Gas Company. You may remember we had announced this in the last quarter of 2018. On April 2nd, we presented our business plan for 2019-2022. The macro indicators are the following. EBITDA at 2022 is supposed to stand at 1,270 million euros, plus 36% versus 2018. RAB at 4.8 billion in 2022, up 28% versus 2018. Investment in the 2018-2022 period is supposed to be about 5 billion. And the minimum dividend for 2019 is expected to be 75 euro cents per share, with further increases over the life of the plan. In the last few weeks, our board of directors has approved the possible issue of bonds under the EMTN program for a total maximum value of about 500 million euros. Of course, for this issuance, we are going to monitor the market virtually on a daily basis, I should say, to make sure we pick the best time to get the issue out on the market. Page 3 shows the financial highlights, some of which I have anticipated already. So revenues are 823 million in the first quarter, so growing by over 10%. EBITDA is 248, which is 8% and plus growth. EBIT is 132, so it's growing by 4%. And the group net profit is 75.5, which is a slight decrease against 77.4 last year. However, we should consider that during 2018, we had accounted an extraordinary income connected to the TWS Group acquisition, which was about 9 million. So net of that extraordinary income, the growth in 2018 would have been 10.2%. So the EBITDA result is actually exceeding the guidance we had provided. It's 8%. It was 8%. And investment is also growing by 14%. So this is in line with the guidance, which said in excess of 10% versus 2018. As far as net debt is concerned, as of 31st of March 2019, it stands at 2,675 million. But this also contains the accounting effect of the implementation of IFRS 16. So this accounting increases net financial position by 55 million. And without that effect, the result would be a net debt of 2,621 million, as against 2,568 million as of 31st of December 2018. Page 4 shows the EBITDA per business area. For the first quarter, the split between non-regulated businesses and regulated businesses is pretty stable. It's about 80% regulated businesses. And if we look at the impact of individual business areas on EBITDA, we see that the most important area is water, which contributes to about 25 million of EBITDA. That includes the effect of the consolidation of Gori too, which you may remember we started consolidating in November 2018. So the year-on-year performance for the first quarter is non-existent. So this is pure increase. Then energy infrastructure is growing slightly, 1 million. Commercial and trading is decreasing by 7 million. The environment is growing by 2.8 million, and all the other items together are decreasing by 3.4. The following pages are going to show the main drivers behind that performance. Page 5 shows the performance of water. Water sees EBITDA growing by 26%, so the contribution of EBITDA from water is 121.6 million, which is up from last year, 25 million up from last year. This growth is due mainly to the growth of 802 and 805, respectively 5.7 million and 2.7 million. And also to the contribution of the consolidation of Gori, which was consolidated using the equity method last year. So as far as the company's consolidation using equity method is concerned, the contribution is 7 million today, considering that we have the effect of the Società Acque di Pisa. Debt was refinanced for that company, and at the same time we have completed the unwinding of derivatives from the previous financing round, which had a negative mark to market. So the impact on the net profit of the company was negative by about 10 million. So the contribution to EBITDA and net profit of the Acea group is about 4.5 million, because the Acea stake in the Acque company is 45%. So without that item, the consolidated using equity method companies would have posted an increase of EBITDA, which would be about 45% without that derivative. As far as investments are concerned, CAPEX is growing by 8.6% and it stands at 73 million. So these are the key issues, the key items. Page 6 shows energy infrastructure business. Here we have a growth of 1.2% of EBITDA, which stands at 95.5 million. Actually, distribution grows by 1.4% and stands at 81.8 million. But we need to remember that last year we had a positive impact of about 3 million, which was the valuation of the tariff increases for 2017. As far as generation is concerned, the growth stands at 6.4% at 14.9 million. Public lighting has a negative impact of 1.2 million, mainly due to the higher maintenance costs incurred for the public lighting system in Rome in particular. We are actually concentrating our efforts there and focusing to improve the quality of that part of the business. CAPEX stands at 73.7 million, which is up 17%, which is in line with our expectations. Commercial and trading, here we see a decrease of EBITDA. It's now 16.4 million as against 23.4 million last year. However, we should remember that if we look at the performance of the company in 2018, the first quarter of 2018 was a quarter which was particularly and unusually, I would say, brilliant, whereas the following quarters of 2018 posted an average EBITDA per quarter of about 17 million, which is pretty much in line with the EBITDA of the first quarter of 2019. So as we speak, we expect that altogether during the year this area may see a decrease of EBITDA, but the EBITDA reduction during the year will be generated mainly by this decrease in the first quarter. We should also consider that as far as electricity customers are concerned, we have 1,733,000 customers at the end of 2019 as against 1,593,000 at the end of 2018, of the first quarter of 2018. So actually we reversed the trend. We actually stopped decreasing the number of customers we sell to, and we actually increased our customer base now. Negative impact on EBITDA was due to margins, in particular margins on the enhanced protection market, where the SCV rates were decreased and cut because of a change in the calculation system of the unpaid bills component. So unfortunately, this is a regulation-based effect which happens to be hitting us ever since the first quarter of 2019 onwards. Page 8 shows the performance of the environment area. EBITDA is actually increasing by 20% and it stands at nearly 17 million. The area is performing very well right now. There's a pretty good improvement in the Acea Ambiente company, plus 2.6 million. We're actually working hard in this area to improve the management of the current equipment we have, but also we're working on the acquisition of other installations through M&A, and we're pretty confident that anytime soon, in the next few months, we'll be able to announce an acquisition, which we are completing right now. As far as the other business areas are concerned, there are no particular comments to be made at this stage. Our overseas is increasing. It's 3.8 million against 3 million last year. Agua de San Pedro, in particular, gives a very good positive contribution. Engineering and services is pretty stable in terms of EBITDA, and as far as the parent company is concerned, the holding company, EBITDA is decreasing slightly, mainly because of some changes and modifications in our contracts. Page 10 shows the EBITDA and net profit performance. EBIT is stands at 132.8 million, which is growing by 4% as against 127.4 million last year. So the drivers are a 23% increase in depreciation, which is mainly due to three components. So total investment in 2018 was quite substantial, pretty high capex was invested in. Then the impact of IFRS 16 increased the depreciation slightly in this quarter, and we'll see in the following pages that depreciation is going to increase by about 9 million on a 12-month basis, and the consolidation of Gori also means depreciation was increased by about 6 million in this particular quarter. As far as the net profit is concerned, the net profit was 75.5 million, which is slightly decreased as against the 77.4 million of last year, but net of the extraordinary component of 8.9 million last year, which is the amount that was reported for the consolidation of the TWS company. So net of that, we would have posted a growth of 10.2%. Tax rate is virtually stable. CAPEX has, and we are at page 11, so CAPEX has reached 151 million as against 133 million last year. Most of this is due to the growth in the water and energy infrastructure businesses. So we keep investing in those businesses, and so besides consolidating the Gori company, we keep investing on the infrastructures for the sewage plants, for the maintenance of water plants, and the improvement of the sewage pipes. And then as far as energy infrastructures are concerned, we are expanding the grid and working on the Tor di Valle power plant for Commercial and trading, we are capitalizing agents' fees based on IFRS 15 as of January 2018. We actually work on existing plants for the environment business. So we work on the Terni and San Vittore plants. We're expanding the Orvieto landfill and revamping Monte Rotondo. Page 12 shows cash flow. First of all, we have a summary of the impact of IFRS 16 on the whole 2019 12 months, as anticipated. So the net financial position is increasing by 55 million, and fixed assets are going to increase by just the same amount, 55 million, of course. Of course, we'll see lower operating costs by about 10 million, rent in particular, whereas we'll have higher depreciations by 9 million and financial costs of 1 million. So there's a neutral impact on P&L. Let's now look at free cash flow. As far as cash flow is concerned, I think we can say that the performance in the management of free cash flow is actually pretty good and improving, especially as far as working capital is concerned. So in the Q1 2019, the working capital change is 88 million as against 101 million last year. So we are aware that the first quarter is traditionally not a positive quarter in terms of working capital, mainly because of payments to suppliers which are made in the first quarter for investments made in the last quarter of the year before. So besides that, we need to calculate the overall performance considering 12 million for M&A. In particular, we are referring to the acquisition of Pescara Distribuzione Gas, and those 12 million are about 4 million for buying 51% of the equity and 8 million for consolidating the company's debt. Then 55 million from IFRS 16, as I was explaining earlier. So the total cash flow means total absorption of 108 million, but without M&A and IFRS 16, the capital absorption would be 41 million, which is compared to 61 million last year. So here again, we're improving. As far as working capital is concerned, something else I can tell you is that we are actually still working on credit management in particular, and I'm happy to report one indicator which I think is pretty significant. So in the first quarter of 2019, we had an unpaid ratio for the commercial and energy business, which stands at 5.1% at 3 months, as against the 8.2% unpaid ratio at 3 months for the same quarter of last year. So we have recovered. This is a 3 months figure. It's not the total final unpaid bills amount, but it's quite interesting improvement and recovery. Now, to complete my explanation of our performance, let's now look at net debt. So we closed at 2,675 million, including the impact of IFRS 16. So the impact on debt is full impact from the first quarter onwards, whereas the positive impact of EBITDA will only happen in following quarters. But despite that, we still stand at 2.8 times net debt over EBITDA as an indicator. So this ratio shows quite obviously we are performing really well in terms of the leverage of the company. As far as the debt structure is concerned, fixed rate is 78% of the debt. The average cost is now accounted at 2.19%, and the average term is 5.5 years. So nothing new to report as far as ratings are concerned. So for Fitch, we're BBB+, and for Moody's, we're Baa2. So this is all from me. So if you have questions, I'll be happy to take them. Excellent. So we can open the Q&A session now. This is the Chorus Call operator, so we'll start in the Q&A session now. If you have questions, please press star 1 on your phone. If you want to exit the line, please press star 2. And please ask your questions by speaking clearly into the microphone. If you have questions, please press star 1 now. The first question from the conference in Italian will be asked by Javier Suarez of Mediobanca. Please. Hello, good afternoon. Good afternoon, everyone, and thank you for answering my questions. I actually have three questions. So the first would be about the supply business, where the performance was a bit weaker in this quarter. At least it was weaker than my expectations and the market consensus, I guess. I did hear the comment you made on the comparison with the first quarter of 2018, which was particularly strong and high performance. But could you please elaborate on that a bit more? Could you please tell us about the trend you are seeing in the liberalized supply market, and how can that have an impact on Acea in the next few quarters? So could you please explain what's happening on the supply market and explain the reason why these numbers are a bit lower than expected? So the second question I would like to ask you and to elaborate on is that I think the contribution of water is higher than originally expected. So would you please tell us about Gori in particular and what expect from their performance and their expectations for Gori towards the end of the year? I think the original expectations appear to be conservative now. The third and last question is about waste management business. So you said during your presentation that you're working on some acquisitions, and could you please provide us with more details about what's going on in the waste management business and what part of the Acea business are you going to obtain from that part of your activities? Okay, thank you, Javier. So we'll start talking about Gori. Yes, I'll take your question on supply management first. So the comment I gave you earlier, I think, was pretty detailed. If you compare the first quarter of this year to the first quarter of last year, we do have a decrease, which is mainly due to margins and to the decrease of the amount of clients, if you look at the quarter-on-quarter data. So decrease in margins is due mainly to the decrease of regulated tariffs on the RCV, which is the protection market. So since 75% of our energy customers are in the enhanced protection market, this is obviously a pretty sensitive change. And also, if we compare the customer base during last year, progressively, the company lost a certain amount of clients. So we increased the amount of customers we serve on the on the free market, but we reduced those who serve on the enhanced protection market. So the good news in this quarter is that we finally got back to increasing the amount of customers. So there's a reversal in trend, which is very important for us, and we expect it to continue over the next few quarters. So my expectation for the next few quarters is that the economic performance is likely to be either stable or increasing. If we compare that performance to the performance of the other 3 quarters of the previous year, well, the performance is virtually the same. It's not that different. And if you compare that to the fourth quarter of last year, the performance is actually improving. So I do expect that for the full 12 years, in line with our expectations for the full 12 years, I expect that most of the margin drop we had from the last few quarters will be concentrated in this early first quarter of the year. So for the rest of the year, for the next 3 quarters of the year, we expect this performance to be neutral on an everyday basis and possibly increasing slightly. As far as Gori is concerned, the performance the first quarter was actually better than actually expected, and it leads us to think it may be better than what we originally stated. So at the beginning, we stated the EBITDA expectation would be 50 to 55 billion. Now, for Gori, for a number of reasons, including some non-recurring costs and items, so we can say that the expectation for the 12 months is now anywhere between 55 and 60 million for Gori. So earlier, we consolidated this at the equity with the equity method. today we consolidated fully because we manage it fully. So it's not just an accounting change, it's a governance change. We manage the company directly now. So the impact of consolidation also has an effect on the operational management, on the fact that our managers do now run Gori as they please, and so we are likely to improve its performance. And today, as we speak, I think the end-of-year performance is going to be anywhere between 55 and 60 million. As far as waste and waste management is concerned, what I said is in line with the strategic business plan presentation. So we want to grow in the waste management business. We understand that in Italy it's really difficult to grow in this business without developing new greenfield installations. So we need to work on the brownfield more, and we need to perform acquisitions in a market where today we stand as the fourth largest player on the market, but the share of the first four players in the market is hardly 10% of the Italian market altogether. So it's a very fragmented market, which means there are very good M&A possibilities. We are evaluating them now. I cannot anticipate any details about this because we are actually negotiating. I can only tell you we are pretty advanced in our negotiations, and that, of course, those kind of deals all fall in line in the rationale of choosing installations that work mostly on the differentiated collection of waste and the processing of urban differentiated waste. Thank you very much. So I hope we answered your questions. Yes, you did. Thank you. The next question will be asked by Enrico Bartoli. Good afternoon, everyone. I also have a few questions. Can we go back to waste for a second? In this quarter, there was a significant improvement, an increase of EBITDA in percentage terms. So, first of all, what were the drivers behind this growth? Was it volumes or prices that increased, or better efficiency, or what are the reasons? And also, I was wondering whether this is a general trend that we can expect to see again in the next few quarters, without considering, of course, the end of the CIP6. And also, when do you expect to see some impact from the expiration of CIP6 in this business? Then I'd like to go back to supply too. So since some of your competitors in this business tend to shift their customers from the regulated market to the free market where margins are more interesting, of course. So what is your strategy in this particular moment in time? Is this a trend which is actually going to optimize the customer base, or is it something where you're working on too? Are you trying to move your customers from the enhanced protection market to the free market too? What do you expect to happen in the next few quarters or 2020? Then a question on water. I was wondering whether there's 9 million increase in EBITDA for 802 and 805. Can you please provide us a split of how much of that is due to tariff increases and how much is connected to quality bonuses? And can we expect that trend to continue over the next few quarters too? And then my final question is, does your guidance include the impact of 55 million from IFRS 16? Thank you. Very good. I'll try and answer all your questions. So first of all, as far as the waste performance improvement question is concerned, I would say the main driver is the increase of the tariffs for the incinerating installations and for the thermal installations in general. So what I can tell you is that with equal market conditions, we may expect this trend to be confirmed and to continue over the next few months and quarters too. As far as the end of CIP6 is concerned, which we expected to happen starting on April 1st, well, in all likelihood, we are going to have CIP6 up and running for the whole second quarter because of detailed analysis of what has been actually done with this installation in these last few years. So there might be a slight increase in the second quarter, which was not originally included in our expectations because of CIP6. Then there was another question about our strategy in the supply business, in shifting clients from enhanced protection market to free market. Yeah, well, actually, we do work in total unbundling on the management of enhanced protection market versus free market. So there's a unit that is actually acquiring clients on the free market and another unit that manages the operations of enhanced protection market clients. So what happened in this quarter, as compared to last year, is that, again, we have a higher amount of clients. We nearly doubled our capability to acquire clients on the free market. We nearly doubled the amount of clients, of gross acquisitions of new clients per month in this quarter as compared to the same quarter last year. So the effect of the whole review of commercial strategies and of operational management of the commercial side of our business is actually being felt starting in this quarter, and we're pretty confident this is going to happen again in the next few quarters. It's even going to be even more visible than right now. Then your question on water, well, I can confirm that growth for 802 and 805 is mainly due to the increase in tariffs. Actually, 805 has no bonuses, and bonuses for 802 are stable year after year. So what I can tell you is that we can expect that income effect to be confirmed in Q2, because last year the 802 tariff was officially determined in the third quarter. So starting from Q3 onwards, we have accounted for on a full tariff basis as approved, whereas in the first two quarters of 2018, we had slightly underestimated the tariffs, which were eventually approved. As far as the guidance for net debt is concerned, the guidance has a 100 million approximation, so between 2.85 billion to 2.95 billion. So IFRS 16 is not included in that guidance. We hope we'll perform well enough to absorb it. We'll stay within the overall guidance. However, the guidance was worked out on a budget which did not account for the impact of IFRS 16. Very good. Thank you. Thank you, Enrico. The next question will be asked by Stefano Gamberini of Equita SIM. Good afternoon. I also have a few questions. So the first will be about guidance for EBITDA. 55 million euros more are expected, and I would like to understand whether that includes the 10 million IFRS 16 impact or not. Secondly, how will you actually obtain that performance? Because commercial is expected to decrease. And so what about corporate that worsened by 4 million in this first quarter? So where are the drivers to obtain that improvement for the full 12 months? Then second question is about the impact of the enhanced protection market clients, because in the previous conference call you were talking about the positive impact of new regulations from the government, and I think you're saying the opposite right now. So I don't understand that change. And my other question is about water. Would you please help me understand if there is any news on the new laws being discussed? Do you have any idea when this is going to be discussed by the Parliament? What kind of expectations do you have there? And also on water, are there any news from the regulators? Because this year the regulators are supposed to introduce an update on the 2020-2024 tariffs. So is there anything new on that side? Thank you. I'll try and recap our EBITDA guidance. I can tell you we confirm the 8% growth now and 5% guidance. Last year we presented 933 million of EBITDA, and we pointed out that 904 were organic growth, whereas the rest was non-organic growth, which was including the early part of the consolidation of Gori. So if I look at the performance, the organic performance, like for like today, we know there is an important item there. So if you if you compare the like for like performance, so excluding Gori, in the first quarter of 2019, you can actually notice that there are two events which may be considered to be non-organic. So one is the minus 4.5 million of the unwinding of assets in 2019, and the other is that in 2018 we had about plus 3 million euros in energy infrastructures, which was due to the impact of recalculating tariffs from 2017. So without those two items, which are non-continuative, and without Gori altogether, the growth of EBITDA in this quarter was about 4%. So if we apply a 4% growth to like-for-like EBITDA of 2018, 904 million, the final result is about 945 million. If you sum the contribution of Gori to that, then we fall in line with the higher range of the guidance, or even exceed the higher range of our guidance. Also, you asking whether we considered in EBITDA guidance the impact of IFRS 16. So we didn't consider it in terms of its impact on debt. So overall, we can say that we can confirm our guidance today. So we're not increasing the guidance, we're confirming it, and we're positive that we may actually get to our expected performance or even exceed it. So the negative impact of the commercial side is a negative impact which I think will be mostly concentrated on this quarter of the year. So year over year in the following quarters, no major differences are expected. As far as the corporate side is concerned, as I was telling you earlier in my comments, the corporate side is actually producing revenues through intercompany agreements. We are reviewing these market conditions because the intercompany agreements are slightly worsening the corporate performance today. So the only difference is 1 or 2 million, and that's all. But we are reviewing in the intercompany contracts. If I may, just a quick follow-up on that. So if I look at this, environment is expected to decrease because of IFRS 16. Trading is not increasing. Overseas, if I get you right, only has an impact on this quarter. Corporate is worse, and distribution is not that different. So all growth comes from water plus Gori. Is that correct? No, waste is increasing. And we didn't actually say this is going to be limited to this quarter. So, of course, from July onwards, we're likely to have the impact of CIP6. So this is also going to improve our original budget because we thought it would start on April 1st. And as far as overseas is concerned, I didn't say it's concentrated in this quarter. Of course, it's a small growth, but we expect this growth to be confirmed in the next few quarters. It's not a one-off item. As far as infrastructure and energy is concerned, last year we had a non-recurring component of about 33 million, so growing by 1% is actually something that concerns this particular quarter, but the infrastructure component does increase and grow, just like the regulated components because of the investments we're making here. So as we speak, frankly, I see no reason why we shouldn't be able to comply with the current guidance. Actually, I think we're more likely to exceed it than reach it. But as per our habits, we'd only improve the guidance once we're absolutely sure we can achieve whatever we promise. As far as RCV tariffs are concerned, I don't remember we ever said we had a positive impact in the last quarter. Actually, the impact is that the change of regulated tariffs for the enhanced protection market clients is something that happened in the first quarter of this year. Of course, it's not there in the last quarter. It's actually Acea that said that in their conference call they said they haven't suffered. They actually reported a positive impact. Well, you should ask them. I cannot comment on the numbers of other players. The only thing I can tell you is, in particular, is that the component which actually worsened our CV for us is the differences we recorded in the unpaid bills item. Then water. Well, as far as water is concerned, as far as the DAGA law is concerned, frankly, I have no update from when we met for the presentation of the business plan. We have no evidence anything is going on that front right now. We have no updates for you right now, nothing different from what we've reported already. So discussion at the Parliament was originally scheduled to start on April 29th, once they would receive the technical non-mandatory opinions from the Ministry of Finance and the Ministry of the Environment. As far as we know, those opinions have not been given to the Parliament yet, so this discussion is not in the Parliament's agenda yet. Well, I thought it was in the Parliament's agenda for the end of May, but maybe I misunderstood that. And what about the authority? Any news on that front? What do you mean by the authority? Any updates on the tariffs, you mean? Exactly, yes. No, we consider that will start in the second half of the year, so there's nothing to report on that front so far. Thank you very much. Thank you, Stefano. The next question will be asked by Emanuele Olgioni of Banca Akros. Good afternoon. Most of my questions have already been asked by some of the colleagues, so I already got the answers, thank you. What is not totally clear to me is the commercial strategy for the trade and retail, because there's lots of clients from the free market to enhanced protection market will eventually mean bigger investments and bigger expenses in marketing and other items. So that might potentially actually compress your margins further on the free market. So I would like to understand something more about the possible strategies you may want to adopt to improve the performance. Of course, I'm looking at the medium term, not next quarter. So how are you working to improve your margins in the free market? Well, may I try and summarize something we've discussed before? As far as margins are concerned, if I look at the margins of the free market today, they are better than the enhanced protection market, because, of course, in the enhanced protection market, you have fixed prices, and the price of the commodity is fixed and determined. So the margins for the free market are actually higher than the enhanced protection market today. However, with the RCV change, the margins on the enhanced protection market are even more penalized. As far as the management of business costs and the cost of acquisition of new clients in particular, the implementation of IFRS 15 starting last year means that the costs connected to the acquisition of new clients are capitalized, so they fall under the investment and not under the EBITDA margin. But we're still working to obtain a growth strategy of our customer base on the free market. So that would be focused on developing and enhancing our distribution channels, and this is partially already seen in our performance. We have more than doubled our selling capacity. The number of new acquired clients is about twice as much as the ones we had 1 year ago. Overall, if I look at the customer base for the electricity part, at the end of Q1 2019, we have more clients than we had at the end of December 2018. So we've reversed the trend, which was decreasing actually before that. There was a question before about our expectations on market liberalization. So we don't know much more than you do, actually. Officially, market liberalization is scheduled to start on July 1st, 2020, and we are working to keeping that deadline in mind. Then there may be a further delay. This is possible, but we don't have any update right now. Thank you. However, I don't want to comment on other players, but I think that there's another local utility that approved its performance a couple of days ago, and I think they didn't perform too brilliantly in this business either. So I think this is a pretty generalized issue. Do you have any other questions? If you do, please press star 1 on your phone. Next question is a follow-up from Enrico Bartoli. I would like to take the liberty to ask another question. You mentioned the possible M&A deal in waste. Could you please give us an update on what's going on for the photovoltaic business? Can we expect any deal in that sector in the next few months? And for NPV, are you doing anything in terms of the organic growth of the company? Well, thanks for your question, because actually I was forgetting to update you on this, which is in our strategy. So we're working on an M&A deal in photovoltaic, and we are actually finalizing new deals there. As explained in the business plan presentation, we have adopted a strategy which is pretty labor intensive, and so it's not necessarily a very quick track, because we're actually in the process of evaluating individual deals, even very small ones, like 1 megawatt and up, because we're interested in making acquisitions that have a return on investment above a minimum threshold we've set ourselves. So I think this is something we also reported when presenting the business plan. We're working on unlevered IRR, which is 7% or higher. So we are actually staying away from big deals with tender offers, where other players are included, including funds that are happy to take lower profitability. So we're working on individual deals and transactions with individual owners. So this is actually yielding its early results. We've made no announcement yet because we're in the due diligence phase with lots of smaller transactions that are going to be signed off in the next few months. However, I believe the target we set in the business plan, which was 50 megawatts through M&As, by 2021, is a target we are likely to meet much earlier than 2021. And as far as greenfield developments are concerned, we're also working on that side of the business. There, the main issue is the authorizations. So we're working to obtain some authorizations on land we already own, and we are acquiring land that have authorizations on board already. But by the time authorizations and acquisitions are finalized, and by the time the equipment is built, well, I can tell you that by the end of this year we may have some installations up and working, but the impact of that component on economics is likely to happen starting next year. Very good. Thank you. Thank you. So we've completed the round of questions. Great. So thank you all for participating to this conference call. As usual, we'll be available to take any follow-up questions you may have through the Investor Relations Office. Thank you. Good night.